Welcome to Trade the Trend, a weekly video about where the stock market is heading. This video is going to focus on the S&P 500. I'm going to cover the ASX 200 as well as gold and a special emerging opportunity in a separate video. I'll leave a link for that in the description section below. This video is also going to have a look at an indicator that has a lot of people worried, so make sure you stick around for that. As always, this is general commentary, it doesn't take your personal situation into account. All of that said, let's get into our first chart. So I've got the S&P 500 up on the screen, and this has really been a week of consolidation. Haven't really seen a great deal of movement in the price action. We did get a new high on Thursday. The market briefly broke up to a new high, but now we're just back within this range we've been in over the last week or so. It's generally been a fairly sideways type of movement. I think the play here remains to the long side. I want to be on the side of the momentum, and that's been the case. That's been the case for quite a few months now. It's been staying on the side of momentum, not trying to pick highs, and that's the key. We've had quite a big move. So, like, do you add to long positions here? Where and when do you do that? And my concern is that the current levels, it just doesn't represent an asymmetric entry point. An asymmetric is where you look at what your potential upside is and you weigh it against your potential downside and go, well, look, I've got a lot more upside than downside. That's the sort of asymmetry that we want. I just don't think that's the case. We've still got a market which is stretched above these moving averages. Moving averages have caught up a bit over the last week, but it is still somewhat stretched. And so that's why I'm just hesitant to add to long positions. I'm happy to look at stocks on a case-by-case basis, but as far as my index position goes, it's not something I'm looking to really add to at current levels. Jumping over and looking at the Nasdaq, and it's very much a similar story in that it has been this week actually coming up to approaching 2 weeks really of sideways consolidation. It's a case that we've had a really strong rally for several months, and these moving averages they are creeping upwards. They're slowly like catching up with this pause we're getting, but like the S&P, I don't want to take on a whole lot of new risk with the market at such an elevated level after a big rally. And there's also the possibility of a bit of divergence creeping in. So you'll remember I said the S&P 500 made a new high on Thursday, but you look at what the Nasdaq's done, it hasn't made a new high yet. So it's only minor divergence, but nonetheless, it is something to be aware of, something to pay attention to. And just to be clear on all this, I'm not looking for a top. I'm not looking to sell or get out of what has been working and what is continuing to work. I'm just not in a hurry to keep buying, because at some point, this rally that's really been underway for the entire year so far, it has to be checked. Every rally is checked, and yes, there could be some more upside in this. We could see this market continue to push higher, but every rally ultimately has to consolidate. Like one thing, for instance, that could happen, and this is just, of course, an absolute possibility. It's not a prediction of what will happen. We could get a market which does punch to a new high, but then over the next week, 2, 3, maybe the next 4 weeks, it then peaks, and then we start to get a larger pullback, which does take the market back towards these moving averages and does bring in a longer period of consolidation. Maybe a couple of months of consolidation, maybe through to into November when the seasonal patterns start to improve. I don't know. I'm just speculating on the sort of things which could happen. And we've got to understand the possibilities of what could happen, and that helps us manage our risk, and that helps us decide, well, look, hey, maybe it's not a time doubling up on a leveraged Nasdaq ETF. So just some of the things which I'm looking at, some of the things I'm thinking about. Now, if you're getting some value, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. tells YouTube you're watching, you're engaging. YouTube will then show other people, and that helps me heaps. So please do that. Hit that subscribe button if you're new to the channel and haven't already done so. Now, jumping over just briefly, just a quick look at the Russell 2000, the small caps. It's been encountering resistance for the past week. We've got this trend line linking up the highs from August last year and February. Look, encountering a bit of turbulence up here. Look, may require some more consolidation below resistance for potentially breaking higher. Now, I don't like to preempt breaks, and you probably know if you've been watching for a while. I like the price action to do what it does, and then I react to the price action. So I'm certainly not looking to buy the Russell just beneath resistance. But look, that said, I still think this can be a large basing pattern. I think the price action is encouraging. We've got rising moving averages, prices above the moving averages. So I think the overall setup is looking encouraging, but with where things are at the moment, it's now a case of like, let's wait and see whether we get a breakout. Let's see if we get a consolidation, which could then lead to some sort of a base then to build a position on the breakout. So it's something to continue watching as well. And just to wrap up, I wanted to talk about an indicator which I think a few people are starting to worry about. So this is this indicator I have at the bottom. It's showing the number of S&P 500 stocks above their 50-day moving average, and at the top I have the S&P 500. So what I'm seeing a few people do is they're looking at this indicator and they're saying, hey, look, last time this indicator got up to 90 and started to pull back, the time before when it got to 90 and started to pull back, led to some pretty decent pullbacks. The last time it was a meaningful pullback, and the time before that it was quite a scary decline. Here we are here and now. Indicators starting to turn lower. So does that mean we're heading for a rerun of, look, potentially this first one? Does this mean the market is peaking and it's going to be like a really big ride down to where we started the year, possibly? Or look, I don't think that's the case. I think anyone who's looking at it like that, I think they're possibly misinterpreting how this indicator works. This works, I think the stocks above their 50-day moving average works much better for picking low points than it does for highs. And I'll show you why I think that. Let me just get a little bit more data on this chart. And we can go back further still, but I'm not going to take a huge amount of time going through this, because you can call up these charts, of course, and analyze them in greater depth, which is always a good thing to do. Here are earlier times, and this is an important distinction. These times, the market, the indicator got above 90% of stocks above the 50-day moving average and started to decline. These were this was in a bullish phase of the market. The market was in a broad upward trend, potentially like I think we are now. So when the market started to pull back, it just brought in really just a relatively short and mild consolidation. And this other example from 2021, the market didn't even pull back initially, but it soon led to just a brief pause. Really, I guess a sideways with a blip up, then a bit of a consolidation, and then upwards again. This is what I would favour on this occasion, with this indicator pulling back. Perhaps this ties in with this market needing to pull back to the moving averages before potentially pushing higher. Again, they're just possibilities, they're not predictions, but don't jump to the worst case scenario first, so it leads to a significant decline, because that, of course, may not be what the market's doing. I don't think that's what the market's doing. But anyway, look, looks like my camera's broken here, so look, thank you for joining me this week. It's been great speaking to you. I look forward to coming back and talking to you next week. Until then, bye for now.